Welcome to my morning report analysis videos on Friday the 5th of April with me, Richard Perry, market analyst at Hantec Markets. We've got a fairly quiet open today. We've got payrolls Friday today. So the markets are seemingly in a bit of a consolidation mode, but there is a slight air of positive risk appetite that still comes through from these trade discussions between the US and China. From the Chinese side, they're suggesting that a new consensus is building to push it forward, and Donald Trump is suggesting that we're expected to see something in the next few weeks. So that's a positive, and subsequently we're seeing risk appetite edging slightly higher, bond yields going up on the 10-year and the 2-year, and we can see safe haven plays just underperforming slightly. You've got the yen, which is slightly weaker. You've got gold, which is slightly lower by $3. And equity markets, certainly in the States, were positive overnight. S&P 500 up 0.2%, and futures another 0.2% up today. Little bit of a consolidation on European markets. And it could be the fact that we've got payrolls coming up this afternoon, and they've had a strong run already, really strong run actually on the DAX, for example. So not a massive surprise to see that stalling slightly in front of payrolls. But generally speaking, I think we're going to get some direction off payrolls today, hopefully, and then the markets can sort of take some direction and move forward rather than the consolidation that we do see across several of the markets at the moment. Now, in terms of how payrolls are looking, well, we've got the expectation of 180,000 jobs on the headline. We've got 3.4% on the average hourly earnings, which is in line with where we were last month, and unemployment at 3.8%. Now, the interesting thing will come possibly with the revisions to last month's 20,000, and as to whether that's revised higher. Also, what you tend to see with payrolls is when you see a strong negative surprise, you quite often see a positive surprise the subsequent month. So that could be something to keep an eye on today. Now, in terms of my chart of the day, we've been following this downtrend on Euro Kiwi for the past 3 months, and that now downtrend has been broken, and there is a base recovery pattern forming. Throughout that whole downtrend, we haven't seen a lower reaction high being broken consistently throughout that period of downtrend, but now that has been broken this morning, and a move above 66.30, and we're seeing that move, which comes with a little mini uptrend. We're seeing the momentum indicators improving. The RSI is now in the mid to high 50s. That is the highest it's been since January. You've got the MACD lines, which are accelerating towards neutral. Stochastics also confirming that RSI at the highest point since for 3 months. So there is something building here, and certainly a closing breakout above 66.30 would constitute a small recovery pattern, small base pattern, which would imply a move. Well, you'd sort of measure it from the 62.90, so that's a move of about 340 pips up higher from 66.30, so that's around about 69.70, which again would come into contact with this February high and these old January highs. So we could certainly see some traction in a recovery with this move on a closing breakout above 66.30 today. So it is certainly something to keep an eye on. The hourly chart looks positively configured with the momentum, the RSI picking up off 40, the MACD lines picking up off neutral, breaking above 70 on the RSI suggests strength, and also we've got the breakout on the price. So it looks like little corrections are going to be seen as a chance to buy now. You've got an uptrend that you can draw in on this hourly chart, which I showed you on the daily chart as well, giving support around 66 figure area. Yeah, any little near-term blips that you get on this chart could well be seen as a chance to buy. So I wish you good luck in your trading today, and I will speak to you later.